Welcome, everyone. And again, as people are joining in, right, just drop in the chat where you're tuning in from this afternoon. I want to see, again, how far we're reaching. And I'm really excited for today's conversation. And I want to say this, like, if this was really helpful for you, or if you really enjoyed it, if I change your mindset today, then as we start doing this, right, bring a friend along with you at the next one. But our goal is to grow together. So, yes, let's go. And first things first, kind of what I alluded to, but I want to tell you what this is going to be and what it's not, right? So we want to really pour back into our community. So we're going to be doing these monthly webinar series. Well, I want to make sure that, can everybody hear me? I just had, yep, perfect. Okay, great. So we're going to start doing these monthly webinar series. And the goal is to show up, right? And just have real conversation about what it actually means to build wealth. So this is not going to be surface level. There's nothing to sell. It's not save more, spend less, right? It's the mindset, strategy, and the shifts that like nobody really talks about. I think that is what's really important. And that's what we need to talk about today. So this is important part, right? I want to think about community first. And again, our goal is pure value where we learn, we grow, and we make decisions together. That's the most important thing. So a lot of what we're going to talk about today is kind of what I've learned over the years. And I believe that when we all do it together, we all rise, we all win. So some of the people in the room, which I'm excited about, are our Phoenix investors. But some of you are thinking about it. Some of you found us last week, but it doesn't matter, right? This is our space and we want to build on this and we want to grow. We want to grow. And so I want this to be interactive, right? I just don't want to talk at you for the next 30 to 45 minutes, but I want you to talk with me, right? So drop your thoughts in the comment chats. Like if you just have questions, if you're like, okay, where do I start? Where am I? I think this is the right place, right? And push back. Like if something hits differently, let me know. If you have questions, if it doesn't make sense, just toss it in the chat and then we can go from there. So right, real quickly before we start, right, I just have a quick promise tonight, right? I just, again, want this to be full value, no fluff, and we just think through what we're really understanding. You're going to understand something that took me like years to really think through. And you're going to understand why people who are making $300,000, $400,000, $500,000 still don't have financial freedom. And more importantly than that, right? You're going to know exactly how to do it. Not someday, but today. I'm actually really excited about this topic because it really starts with mindset. And I'm going to ask you some hard questions. And I really want us to kind of think through what we're doing. So this is what we're going to start with. And I want to start with data first, because I want to make you uncomfortable. And I'm going to tell you a short version of kind of what I've learned. But the bulk of our time is going to be thinking through 5 identity shifts and really asking you questions. And with each identity shift, I'm going to think through a framework with you that you can start implementing, today, tomorrow, but not someday. Because I think if you can take one thing out of today, I think it's going to be so important for you. So if you're in this room, right, you're likely, top 5, top 10% earner. And maybe some of you are even like top 2%, right? But the thing is, you have done everything right. You went to school, you got trained, you started in your career, and you earn really well. But the question that most people truly are afraid to ask out loud is, why doesn't my net worth reflect my income, right? Like that's the question people are asking. Like I'm working really hard and I'm making good money, but why doesn't that reflect my net worth, what I'm building, where I'm going, how I'm growing? So I want to show you why. Let me hit you with some numbers. And these numbers are pretty scary, but also thought-provoking, right? So half of Americans who earn over $100,000 are living paycheck to paycheck. And so that's the first one. And some of us have heard that. And some of us are like, okay, yes. But think about that, that's half, right? And it gets even worse, right? Goldman Sachs found that 41% of people making $300,000 to $500,000 also say the same thing. That means they're also living paycheck to paycheck. And for healthcare professionals and for physicians specifically, right? 25% of us have a net worth that is under 500,000. I just need you to think about that for a second, right? And the even more stark part is that and the average doctor doesn't cross 1 million in net worth until the age of 55. That should that should make you pause, right? That should make you think and go like reassess kind of where you are, but also congratulate you if you're here and you're younger and you're thinking, okay, how can I build towards that? Or if you're already there, then even better, right? How do you multiply that? But after decades of like elite income, so making good money, right? That's what I want you to think about. Like, why is it that we have, some people haven't crossed that $1 million net worth? Why are some people living paycheck to paycheck? But here's the one thing that reframes everything. And I want us to think about that, right? Ramsey Solutions studied 10,000 millionaires, and only 31% of them average $100,000 or more a year. And so what that should tell you is that millionaires they think differently, right? That's 3 out of 4 of them, right? Said consistent investing over time, it's not salary, was the reason that they built wealth. And I think that is so important for you sitting here and thinking about like, what do I need to do differently, right? You will learn that the highest earners are not the wealthiest people in America. And that should shock you, right? Because some of us are making good money, but like we would not be considered the wealthiest because people are doing a different strategy than us. The truth is that the best investors are the wealthiest. And so the question is like, what's the variable, right? It's not income, right? It's not intelligence, but it's how they start thinking and approaching their money. And so that is really important. This is the thesis behind my entire presentation today. And it's that your financial identity, the story that you tell about yourself and how you relate to money, right? That determines your behavior. And your behavior is what determines your outcome. So it's identity, behavior, and outcome. And it's really important, again, because today we're talking about the investor's mindset. So if your identity is, I'm a physician, or I'm a healthcare professional, or I'm a busy professional, and I earn well, right? You earn well, but it'll stop there, right? But if your identity says, I'm a wealth builder who happens to do that XYZ, who happens to practice medicine or whatever else you do, right? Everything downstream changes. So it's really how you think about it. But the thing is, you have to think about it. It is same income, different behavior, and that radically differentiates 10, 20, 30 years, right? And my goal is to give you 5 identity shifts this afternoon, right? But the first 90 seconds, I just want to tell you kind of how I learned this or why this was important to me. And I want to share my story with you and the reason why is because maybe you can glean from it, you can learn from it. But at the end of the day, right, my goal in our community is to build together, is to grow together. And I'm actually kind of excited about where this is going to take us. But very quick version, right? I was an ER doctor and I was working 20 plus shifts. I was making good money, nice lifestyle, but like I had zero passive income, right? And then private equity took over our department. And I realized, this is the thing that I realized that changed everything for me. It was that my income, right, it belonged to whoever controlled my job. And it didn't belong to me, right? And that question really forced me to think about something. It made me ask, what do I actually own that pays me, whether I show up or not? And you have to think about that question. And the answer was nothing, right? And this was how, and part of my story, as people know here, as an investor, right, invest a lot in real estate. And so I delved into that, right? So my first investment, I put it into a real estate investment and it returned about 16%, and that was coming in annually. But more important than that is that it gave me clarity, right? So I saw what was possible when money starts working for you. And that is the most important thing that I want you to think about. And maybe I want you to take away today is what happens when your money starts working for you. And that is how kind of downstream Phoenix was built. And that's how kind of my story changed, right? I still practice medicine, but it's now becoming by choice, right? And none of it started out with money. It started with changing what I believed. And that's what I want to teach you today. So there are 5 shifts. Again, I'm really excited about it. This is kind of the roadmap that I'm going to walk us through today. We'll go through each one of them. I'm going to put a little data behind it. Then I want to put a framework to help us apply it, then just an action this week. And when I was preparing this and kind of thinking through this, it got me excited because this is the thing it did for me, right? It also made me hold myself accountable. And so I will share with you, and I'm hoping the people today are excited to share kind of what they're thinking about. But take a screenshot of this slide. I want you to just take notes, pull out your phone as I'm talking, be asking yourself hard questions, right? Am I doing this? Am I thinking about this? Do I have the right people in line that are helping me do this, right? And then also, as you ask questions, right, some of those questions are going to help me think about topics that we can talk about in the future. Because I think, like next month and the months ahead, because I think that's how we're going to grow, right? One thing you have to know is that your struggle might also be someone else's struggle in the community as we chat, as we talk. So please put your questions in the chat, and I want to go through that. So the first shift is to go from consumer to owner. This is the foundation, right? When we start thinking about wealth builders, a lot of wealth builders are owners, right? And everything we talk about today is going to rest on that. How do I go from consuming, right, to start thinking about ownership? So this is first shift. Two people, they make the same income, we'll say 400K a year, right? And it's the same 15 years. Now, the consumer, right, they're going to spend first and then they'll save whatever. So think about that 400K a year, right? After 6 million, right? And that's in lifetime earnings. Some of them might have roughly $500,000 and nothing in passive income. They're still dependent on showing up, 100% of that, right? If you're sitting here and you don't think that's a problem, then I'm glad you're here so that I can convince you why, right? And so that's the consumer. And then the owner starts to allocate first, right? So that's the first thing you think about as soon as money comes in is, what am I allocating this money to? So that could look like, $100,000 a year into income producing assets, right? If you did that after 15 years, you're going to have about 2.5 million plus in net assets, right? And you might even be getting like $10,000 to $15,000 per month in passive income. Those two people, same paycheck, but the difference is over $2 million, right? The only variable is what they believe about money. Are you consuming first or are you building? That's the thing I want us to think about in these 5 shifts, right? And this is the data, right, that points you to like make this real. Goldman Sachs did a survey and they found out that the primary reason why high earners live paycheck to paycheck is just lifestyle inflation, right? So those luxuries, which I'm not opposed to it, right? But like within reason, but those luxuries, they become like perceived necessities. So as you make more, your lifestyle inflates, right? And those luxuries now, again, it becomes something that you have to. And it's not because like they don't earn enough, but it's because the spending starts to rise at the same rate as their income every single time. And this is a study that was done. So again, right, I want to prove, as I talk, I want data to back what I say so that you know. So that's the first one, right? Consumer to owner, how you have to start changing. But this is the framework because it requires some rewiring. And I want us to start simple. I want us to start small. And so that's kind of my goal, right? So when income arrives, right, the first move needs to be allocation. A set percentage of that goes to assets before you touch anything else, right? Don't do it from what's left over, but first, do it first, right? And the question that should drive this is like, can this dollar work for me first? That's what you should be thinking, right? So it's simple, right? Today, I want to tell you, and I really want to push the thought across to you, right? The mindset shift or the changes, they're small changes. They're not drastic changes over time, right? They're just tiny things that you need to do every day. And you need to or you need to just make a decision of what to do. So your action this week, right? Decide an allocation percentage. And I love that today is February 28th, right? So that like, if you want to start fresh tomorrow, it's the beginning of a new month and maybe I can keep you accountable. But so if you're starting, right? If this is the first time you're even thinking about doing this, do 10%, right? But if you're further along, right, push it to 20, 25%. What does that look like? And then the next step is please automate it. Make it leave your account without you having to think about it, right? And you can, again, start small. But this one change, if you allocate first and then spend second, right? It is the single highest leverage behavioral shift that you can do, that you can make, that will make a big difference. And you might not see that difference today when you start or tomorrow when you start, right? But I guarantee you, I can even say I promise you that a year, 3 years, 5 years, 10 years, you're going to see a huge difference. So that is mindset shift number 1, consumer to owner. And this next shift is from saver to allocator, right? And this one is going to challenge something that you've been taught your whole life, right? Because a lot of us are taught like we just have to save money, put money, it's safest under your bed, it's safest in a container somewhere. But the question is, what is it doing for you? So I want you to run the math with me, right? $200,000 in a high yield savings account roughly is going to give you maybe at 4.5%, but I don't know where we can get that today. A few years, yes, but that number is coming down. But I did best case scenario, right? So that is $9,000 a year. Now that sounds okay, right? 200K making 9,000, but then after taxes, right? Because you're going to get taxed on that money. So roughly 25 to 30% is what you're going to get taxed on that. So now you're at like 6,300. But then after inflation, like inflation is at 3.5%, right? You're actually losing purchasing power. That safe money is dying slowly. And I just want I want you to, again, right? My goal is to make you think, and to have someone, right? And we can have conversation about thinking about what can I do differently to change behavior. So if you see what you're doing, right, how can this change? And so now take that same $200,000, right? And let's just say deploy it into real estate. I do real estate, but I don't only do that, right? I believe in diversification. But take that $200,000 and toss it into real estate. Think long term, right? So in that you could be making about 15 to 18% annually, right? So when you just put in your savings account, it was making like 6,000, and then we thought about it with inflation even less. But think about it in maybe real estate investment opportunity, right? You're making about 30 to 36,000 on that 20,000, on that $200,000 that you're investing. That is 4 to 5 times what it was doing in your savings account. But then, think about the benefits, the tax benefits. So you get depreciation, you can do cost segregation, right? And a lot of that is tax advantage. So that's same money, but radically different outcome. And now you know that because like we're having this conversation and we're thinking about ways to change. A saver is going to protect their capital, but an allocator starts to think about how to deploy it. Like, what can the money do for me? And so the second question I want to ask, or this shift, right, is you need to stop asking, is it safe? And start asking, is it smart, right? What I'm doing with the money, is that the smartest thing to do with it? And if it isn't, what other options do you have? Okay, so that's another. So this is something that I want us to think about, right? And this is the framework here. The second one, like this mindset shift is going to track, it's going to be the metric that you track, right? A lot of savers, they'll look at their bank account balance and they're like, okay, it looks really good. But when you start thinking like an allocator, right, you're going to start thinking about cash flow. So how much money comes in without you showing up to that thing, right? Without you being there. That's how you have to think. So that is the mindset shift that you're thinking about today, is what are you tracking? Are you should no longer be tracking your bank, your balance, right? Your bank balance, but start tracking cash flow. And I do think, make sure you have your savings for rainy day, make sure you have your emergency fund. But outside of that, right, you need to start looking at cash flow. So my second ask for you, or action, right? And you don't have to do all of them, but have this, and this, you can watch this later. The recording will be available, but think about the question I want you to think about or write down is, what do you have coming in currently in passive income, right? Write down that exact number. And for some, it might be 0, right? Years ago, it was 0 for me. Write that down. And there's no shame in that, right? But then think about, at least you now have a baseline. And from this point forward, right, that number is the one that matters. That's what you're going to be tracking, because you have to start thinking about, what can I own that's bringing in money for me while I continue the thing, the work that I'm doing, my 9 to 5, my building, right? How is that flowing into building wealth? Okay, this is the third shift, and it's from solo to team, right? And I need to talk to some of the high achievers in the room, and talking to myself too, right? The people who got here, some of us got here because we were the smartest person in the room, right? And so this shift is really specifically for you, from solo to team, thinking about our team. What do I need to do by myself versus find someone else? This is the pattern, right? So you decide to invest, right? So you think, I need to learn everything first. You come to this webinar and you're like, okay, let me take this all in, right? You watch videos, YouTube University, I love it. You read the books, you join groups on Facebook. The more you learn, right, the more you realize, oh my goodness, I didn't know that, I didn't know that, I didn't know that. So you keep researching. 6 months goes by, 2 years go by, and you haven't deployed a single dollar. That is what I want you to think, to reframe your mind today, right? That's what's costing you. And Ramsey Solutions, they found that 75% of millionaires said consistent investing over a long period of time was the number one reason why they built wealth. And it wasn't expertise, it wasn't picking the right stock. It was just time, right? It was time in the market. It is over a long period of time. So every year that you spend perfecting your knowledge, instead of deploying that capital, is a year of compounding that you never, ever, ever, ever get back. And that's, I think, the real cost of going solo, right? You think you can do it, but you're afraid to make mistakes. And I see someone said 20 years go by. It's true, right? Because you're like, okay, I'll do it tomorrow. I'll do it. And then you're not sure. And then you just never do it. And so that is the one thing that I just want you to think about. So this is the framework that you need to understand. You don't need to be the operator. You need to find someone. You need to find an expert, right? And I'll talk about, again, syndications. That's where it comes in, right? You invest alongside with experienced operators who do the work for you, right? You bring the capital and the due diligence, and then they bring execution. And that's what I did for my first deal ever. For the first time I did it, I was a passive investor and I put money into a deal. But I vetted the operator because I said, well, I can't do it by myself, right? Who do I need to lean on? And that's kind of what I want you to think about. Again, my example is real estate investing. It's not the only thing I do, but your action this week is like, find one area of your financial life where you're trying to DIY it yourself. So like, is it investing? Is it tax strategy? Is it estate planning that you're like, I'm going to do this with Claude? Claude and I, or ChatGPT and I are going to do this. I would say go find an expert, right? Again, what is it? Whether it's even thinking about like starting to build a small business, right? I talked about stack strategy. I talked about investing, whether it's like all sorts of investing, right? But go find an expert and stop being a one-person army, right? Our job is whatever it is, that's what we're skilled in, right? And there are other things that we need to learn and to understand. And I do want you to understand your finances, but there are areas that you probably need to outsource to an expert who can do it better than you so that your money's working even better. So, and this is something that I struggled with. So I'm putting it out there, but that's what I want you to know, right? And that is kind of like the third, and that's what I wanted you to know about that. This shift from fear to conviction, this one is kind of emotional. And I think it needs to be because fear is the most expensive thing in your financial life right now. And I understand, right? Because you've worked really hard. And this, some of us work night shifts, some of us work crazy hours, some of us give up holidays, right? And so you've worked hard for that. And so to make decisions, right? Sometimes it's scary. But I think that you have to start thinking about really, I think it needs to be more conviction than fear. And that's something that I want you to understand, right? I want you to understand the power behind inaction, right? What is that costing you when you don't make a decision or when you just sit and think about it, right? That is costing a significant amount. And I want to put an amount dollar in the fear because I think when you see it, right, it'll help you understand. $100,000 invested today, right, in different investment opportunities. Some can bring you about 15% annual returns, right? That's a reasonable target, I'll say, for like real estate investing and definitely certain other investment vehicles. That thinking about that, right, could be worth like 405,000 in 10 years. And when you look at these numbers, you're like, okay, wait, what? But if you wait 3 years from now, right, and you did that exact same strategy, that same exact investment, right, and maybe you were waiting because you weren't sure, you weren't ready, whatever it is, right, life happened, right, that same investment 3 years from now is only worth 266,000 in that same window. That 3-year delay cost you 139,000. And some of us, right, it's just additional income that we're not using, that's sitting somewhere, and we're just afraid because we don't know what to do with it, right? That again is just the same scenario of $100,000, right? It's going to cost you $139,000 because of fear, right? And then and meanwhile, like the nation's saving average is like 3.8%, and people are barely keeping up with the pace of inflation. So that's something I just want you to think about. And I want you to also know this, right? 94% of millionaires right now, like they say that they live below their means. And it's not because they're fearless, right? But it's because they act in spite of uncertainty, right? They don't wait for the fear to disappear. They just move. And that comes with, against all the education we've done, but that also comes with taking calculated risk. And that risk comes from doing your due diligence and learning, right? But at least they do that. And so, what is your action for this week, right? I want you to write down one investment decision that you have been sitting on, right? You maybe have been sitting on it for a year, 3 years, 5 years, right? And you're like, when am I going to do that, right? Go online and pull out a compound interest calculator, right? There are a few good ones online, and figure out what that waiting has already cost you. Like what has it cost you today? Figure that out, because I want you to let the math do the talking. It's one thing to be like, okay, yeah, maybe I lost like a few thousand, but it's another thing to see that it may have been 100,000, 150,000, 200,000, and then you could think, well, what could I have done with that money, right? You could have invested it. Maybe you could have used that to travel or do something, right? Maybe you could have used that to build a small side business, whatever it is. But that's what you should do, because I want you to see that it's very hard to stay scared when the numbers actually start staring at you. Like when you see them and you're like, wait, what? So this is for this one, right? This is the reframe that I want you to think about. Like risk is not about, it's not just about what you could lose. It's about what you'll never gain, right? So every year that you wait, right, inflation happens. Taxes, they get a cut. Compound interest is not happening, right? That just vanishes. Like that one just vanishes every year without anything. So that's also the reframe. And then when you sit down and just look at one investment decision that you could have made yesterday, maybe yesterday won't hurt you as much because you're here today and you'll do it. But one decision that you maybe should have made last year, and I'm thinking about one myself, and what that looks like, how much you lost, and then make from there, right? When you see that, make a decision today. So this is the final shift, and it's from dreamer to operator. And this is the one that makes everything else really real. And so I thought, when I thought about this one, I could understand it, and kind of use it to frame everything else. So the dreamer just consumes, right? And the operator executes, right? And so the dreamer is like, okay, one day, someone or some people will sit in this presentation and listen to it and not do anything about it, right? But the operator is going to say, okay, this quarter, right? We have one more month in this quarter. I'm going to do something. I'm going to do one thing, right? And some, they might even say, tomorrow, March 1st, I'm going to start. This is the thing I'm going to do. And this is the critical insight that I want you to think about, right? The operator just doesn't wait to feel like they are an investor, right? Like, because you're not an investor day one, but you start thinking, but they start acting like one, right? So they decide, I'm going to be an investor, and then the behavior is going to follow. So the identity comes first. Remember, I told you it was mindset, then it was becoming that, the identity, and then it's behavior after that, right? And so that's how I want you to think about it. This is also another data point, is that 79% of millionaires, they did not inherit their wealth. That blows my mind, right? So these are people that, like, they built it, they started building it, but it was through consistent action over time. It wasn't luck, it wasn't genius, it was just consistent action, and they did it, right? Now I'll say this again, I alluded to this, right? There are things that I have not done, but I really need to execute on. And so when I thought about this, right, my heart was, how can I start tomorrow? And that's why I wanted to add this one in there, is what are we going to do today that is going to help us move the needle tomorrow, right? I'm going to be making some big, bold decisions today. And I know that as you're sitting here listening, right, you're thinking, what can that be for me? And so I would just encourage you to write it down. Again, I told you, take pictures, pull out your phone, notes app, just take some notes and make some decisions that you're going to start doing today. So I came up with just like a quick checklist, right? You don't have to do all 5 of them, but you need to be moving towards that. But you also need to start somewhere, right? So do you have a capital allocation plan? Do you know what a good deal looks like? Do you have a team? And your team, right? If you're starting out, your team could be you and one other person, right? It could be you and maybe a tax strategist. It could be just, again, maybe you and a financial advisor together, not just hand everything over to them, but you and that person. So your team does not have to be 5 people or 10, right? You could start small. And as you build, then more needs come and you can continue from there. So again, are you reviewing the opportunities? And the most important thing I think is, do you identify as an investor right now? So I'm not aspiring, I'm not interested. And you don't have to have, you don't have to have $1 million to start doing this right now. You can start now. Figure out one way that you want to, one thing that you want to do, and move forward to that. So this is something, just write it down, right? Write down one sentence, like investor identity statement right now. So I'm an investor who deploys capital into income producing assets, along with experienced operators or experienced experts, whatever you want to write down, right? Whatever your version is, write that down. Write it down, stick it somewhere, put it on your phone screensaver. I don't know if you have a vision board, put it there somewhere. Again, right? Because the identity always comes first, and then everything else follows after that. The behavior is going to follow after that. So who you are, and then start thinking what do I need to do today? Again, do you have capital allocated? Do you know what good investments look like? This is where you ask, experience, you ask experts, maybe even the community or some groups that you trust, right? Some of us have maybe small investment groups that we're part of, right? This is where you can start asking them questions. What are people doing? Again, do you have a team that is not just you, but someone else who's an expert, right? Because you're an expert in one thing, but not everything. So that's just something that I want you to think about. So 5 questions, right? And these 5 questions, each one of them maps to a shift that we talk about. And I want you to just answer them honestly. And maybe, right, maybe you can drop a number in the chat of the one that resonated with you the most, right? So the first one is when your income goes up, do you spend, does your spending rise at the same rate? So that's consumer versus owner. Is that the one that you're struggling with? I'd love you to just put it in chats, put it in the comments. The second question I have is, do you know your exact monthly passive income? Do you have anything that's coming in, right? So that means, are you a saver? Are you an allocator? And I have done this, right? As I was going through this, I was writing and I was taking notes because I also wanted to see where I am. And full disclosure, I have a lot of room to grow, but I'm excited that we're doing this together. The third one is, are you trying to figure out investing completely on your own? So that's solo versus team. Is that the thing that you're struggling with, right? The fourth one, which we talked about, has fear stopped you from an investment you believed in, right? Fear versus conviction. And I'll say this, there are a lot of people who said, I should have done this. Right? If I had done this, my whole life would have changed. My whole trajectory would have changed, right? So is that the one that you're struggling with? Or is that the one that you are saying, today, I'm going to change that? And then the last one, would you describe yourself as an investor today? Not someday, when? So that is dreamer versus operator. So I would love to just toss it in the chat. If there was one that hit the hardest for you, right? Put it in the chat. I just love to know where people are. I'll start. I think 3 and 4 are probably the 2 that resonated the most with me. So, thinking about trying to do this by myself, which I was before, and then just kind of, that hesitation, that fear of I didn't do it. And I look back and say, man, I should have done that. So if you are brave, put it in the chat. Which one hit the hardest? Which one are you struggling with? I just love to maybe see if I'm alone, or if we have dreamers here who never start, but who are ready to start today. If any one of them resonated with you, just toss it in the chat. I'd love to kind of hear and see. I'll give people maybe 30 seconds to just read it and think about it. Okay, 3. Yep, resonate. That one definitely resonates with me. 3. Same. Okay, I'm not the only one. 4. Yep. Okay, so a lot of us here are kind of along the same lines, and we're thinking about what we can do differently. Thank you for all of those who responded. Toss it in the chat. But I don't want you to leave here today just feeling inspired but confused. I don't want that, right? And so and you don't have to do everything today. The goal of these monthly investor series, right, is really to come to to ask questions, and then we figure it out together. So again, these are the 5 specific actions, one for each shift, and you don't need to do all of them, right? Just pick one that kind of corresponds to the question that hit you the hardest, right? And then try to do something about it tomorrow, or as the week starts, right? The gap between what we talk about today in this presentation, in this webinar, and wealth, this gap, like this space in between, is just action, right? It's just taking the action. It's not more information. It's making a decision. And you might not make the right decision the first time, but the more you learn, right, the more you take, again, it's reps. And so you need to build that, but you have to start doing something that is going to change, or that's going to move you from point A to point B. And so I'll tell you, I'm going to focus on number 3, right? I'm going to there's an area that I need to find an expert in that is outside of real estate, but I want to build out a plan, a specific investment plan and a strategy that I'm thinking of. And so that's something that I'm going to do today. So think about it, think about what you want to do, and then take it from there. So next month, right, we are going to, and I'm about to wrap up, next month, we're going to go a little bit more tactical. So kind of think about, today we talked about the identity, and tomorrow thinking about next month thinking about the operating system, right? How do we need to start doing with each of these, right? Who is the person? How do we go about it? What do we need to do to move us to the next step? So that's my goal as we think about this every month. My heart is that we stay connected between now and then. So write what you're going to do in the chat, share it, and if not with us, right, but if you have like kind of a core group accountability, again, strategist, your advisor, but I would say do that. And then kind of go from there, but figure out a way to get people to hold us accountable. And that is all I got. Thank you so much for being here. And thank you for everyone who showed up, and also kind of talking about some of our struggles, and then telling us something that you're going to work on to do better about. This identity shift doesn't just start with a deal, right? It starts with a decision. And make your decision this week, and then go from there. And I'm excited to hear what people are going to do, what they're going to commit to, and then we'll build it out for next month. So thank you so much. And that's all I got. I would love to open it up for questions. If there's a question you have, if there's a shift that resonated with you, what are you going to start doing differently? I would love to hear it, but I'm going to go ahead and kind of see if there are any questions. If anybody has any questions, please put it in the chat. If there's something that hit hardest that you want to think about, go ahead and do that as well. Are you going to be sending out this recording? Absolutely. So you are going to definitely get the recording. And I know someone's typing, but what can I do with this is a good question. What can I do with $1,000 a month? That's a really good question. So I would say, again, this is where an expert comes in, right? This is where you probably need to sit down with an advisor. And I want to make sure that, because what I tell you might not be the right strategy for you, right? And so this looks like maybe you start investing in something that is kind of safe, that'll bring in returns, right? That'll bring in a little bit of guaranteed returns over a long period of time. But I would also say maybe you kind of start with thinking about a plan. So some of it might be learning, some of it might be education, and then some of it might be just putting it in something that's safe, that's growing over time as you start building more. But again, right, my heart is that as you start thinking about this, you find someone who is an expert to kind of walk you along the journey. What is the first step to improving? The next question came up, but it's not on the screen, but I'll read it because I can see the chat. Okay, perfect. What's the first step to improving your relationship with money? It's a lot of what we talked about today, right? It's mindset. And I think that we have to start thinking from an ownership standpoint. So what can that money do for us? How can that money help us grow? I think that's the first thing. And I think that's the most important thing. And again, right, I tossed out some data on what millionaires did differently, right? A lot of them started investing day one and built from there. That's the first step to improvement. I think it's mindset, but also realizing like that first question that came in, like, what can I do with that amount of money, right? You're starting somewhere and you're going to build and grow from there. So it's just that idea of how can I start owning? How can I start investing today? Okay. And any other questions? Okay, I think someone else is typing. If you have questions, just like stuff that you're thinking about, what does this look like as we start thinking about growing? But I'm really excited with where we're thinking about. Also, if you have a struggle, right? If there's something that you're like, we should talk about this, maybe months leading up. And also, if there's an area where I can even bring in an expert to have these conversations with us, I think that that's also good. Oh, is there a way to make up for lost time? Compounding is gone. But I'll say this one is a no-brainer, right? You have to start today. You have to start tomorrow, but you can't wait for another 6 months. And I can say this without a shadow of a doubt, right? If you started today, if you put that 1,000 in something, or if you started building, you'll be like, you can see what compounding will do. You can see what growing it will do. It'll be such a significant difference in a year, in 3 years. And you can build something and then use that to continue building more and more. So is there a way to save up for lost times? We can't, we want to go back. Like, I wish I started 5 years ago, 10 years ago, right? But we are here today. And so I would say, think about starting today as opposed to starting in 3 months or 6 months. Okay. Thank you for all the questions. I've loved it. You're very welcome. If anybody else has any questions, I am available. I'll put my let me see if I can go back to sharing my screen. Let me see if I can share my screen real quickly. And I'm just going to put my contact information real quickly. So let's see. Perfect. Great. So this is my contact information. If you have any questions at all, feel free to connect with me. You can email, social media, phone number, but feel free to connect with me. And then maybe we can even set up a call and just kind of think through this and see what we can build together. Okay, so that is all I got. Thank you so much for joining. Have a wonderful rest of your Saturday and a wonderful rest of your weekend. Bye, everyone.